Greetings, members, one and all of the Salivation Nation. Gold holds, silver dips, and rhodium plunges. Let's explore! Yes, very interesting movement in the markets today with the precious metals. The only one that's in the green is gold. The other metals have taken a little bit of a hit, but not too much, except for rhodium. Tried silver is down 13 cents, about a half a percentage point, whereas gold is just barely holding its head above water with about a 0.02% increase. Platinum is down only $1. And palladium is down $24, but just over 1% decrease. But rhodium got hit hard with an almost 9% decrease. That's $1,500 just wiped out of the top of it. It did hit a high of 21,500. The bubble may be bursting for rhodium. And I know I'm going to hear it in the comments section as I have an ounce of rhodium. And people have been clamoring to get me to sell that darn thing. But you know, I just couldn't bring myself to do it at 21,000, and I'm less likely to do it even now at 18,000. And of course, it could dip even more. It's a very volatile metal. But let's talk a little bit more about why the other precious metals went down or did what they did in this article here from Market Watch. Although this is talking about gold being down and actually recover a little bit of those losses, but I think a lot of the fundamentals kind of remain intact here. But it goes to show you about the kind of how resilient gold is through all of this market fluctuations here. Gold futures ended lower Monday, down a third straight session as government bond yields pulled back and the U.S. dollar strengthened ahead of the Federal Reserve meeting on monetary policy later this week. And so they will be meeting, talk about it, and the dollar is kind of strengthening there. And prices for the precious metal initially climbed Monday ahead of what is expected to be another dovish confirmation Fed policy meeting later this week, as the COVID vaccine and lockdown news bolstered the prospects of a more global fiscal and monetary stimulus, said Edward Moya, senior market analyst at Oanda, in a market update. Ahead of the Fed's two-day policy meeting, which concludes Wednesday, gold should settle between $1,850 and $1,900 range, said Moya. The metal's outlook is still bullish, mainly because of dovish commitments from Fed Chairman Jerome Powell and Treasury Secretary nominee Janet Yellen, he said. The next couple of weeks are big for fiscal negotiations, and that should be critical for gold's short-term outlook. February gold fell $1 or nearly 0.01 or 0.1% to settle at $1855.20 an ounce, off the session lows of $1846.20. Prices put a weekly gain of about 1.4% on Friday. Silver for March delivery was down 0.65%, down 7 cents, or 0.3% at $25.48 an ounce, following a 2.8% weekly gain. The move for gold came as another rise following a steady stream of negative European news that sent euro sharply lower, which is going to reflect back in the dollar strength against these other currencies, especially the euro, with the dollar index up 0.15%, at a 1% to 90.36 as gold futures settled after tapping a high of 90.519. The risk-off tone from equity and bond markets helped to support the dollar, causing buck-denominated gold and silver to drop, said Fawad Razakzada, market analyst at Think Markets, in an email commentary. However, the Treasury yields going lower. This has reduced some of the bearish bias on gold, which has been struggling for direction over the past few months. He said, adding that gold could be about to stage a rebound. So this kind of market stability, or with gold kind of being down here the last couple of weeks, and people taking advantage of buying on dips, well, it may be short-lived because we could see it rise here soon. And I'm bullish too for both gold and silver, and kind of was expecting that this would be somewhat short-lived here. But I'm hoping that will continue to drop. But as you know, I've been pretty bullish for this year for both gold and silver. So we'll see how that plays out. 10-year Treasury note rate was at 1.05%. Bond prices rise and yields fall. Government bonds were responding to signs of COVID fragility in Europe, with growing talk of double-dip recessions in the Eurozone amid fears of longer-lasting restrictions to curb the spread of the deadly pathogen. And by deadly, it is, understandably that some people react differently than others, and we feel for those who have suffered from this thing. But largely, people do get over it. I mean, it's a bad flu for the vast majority of people that get it. And that, again, that's not to take lightly those who have experienced worse or very bad reactions to it. Falling bond yields can help lift gold prices because the commodity doesn't offer a coupon. It doesn't pay dividends. Gold traders also awaited data on the health of the U.S. economy, with gross domestic product data due Thursday. For certain, the metal is likely to see much higher volatility during this week, and the event that is likely to influence the gold prices the most will be the U.S. GDP number, wrote Naeem Aslam, chief market analyst at AvaTrade, in a daily research note. And my guess is that number may go down. We'll see, because this resurgence of the COVID and the closing down of some of these businesses and the like, I think we're going to see probably it hurt a little bit there. But we'll see. Could be wrong. The gold market also weighed prospects for a rebound for a proposed $1.9 trillion coronavirus relief package from newly minted U.S. President Joe Biden, as well as further guidance from the Fed on its liquidity programs, which have been underpinning financial markets. In other COMEX trading, prices for copper edged up slightly, 0.1%, and platinum fell and palladium fell as well. Bottom line for both industrial and precious metals, as long as a longer-term downtrend in the dollar continues and stimulus-fueled growth and inflation expectations are maintained, the metals should be able to continue their uptrends well into 2021, said analysts in the latest Stephen Report Research newsletter. And so if we see this and the economy kind of rebounds at a slow pace, we should still expect to see precious metals go up, probably at a slow pace, but rise nonetheless. We'll see how it plays out. Very interesting indeed, but there's where we are at right now with the markets. In fact, from the beginning of the recording, to now, it did dip a little bit, and now it's back up just by a dime for gold there, and so it's barely keeping its head above water, and these other metals are kind of suffering just a little bit here today. So there's your market update for today. Fascinating indeed. Where do you think the metals prices will go through the week? It'll be very interesting to find out. My guess is it may kind of stay in this general area, maybe rise a little bit as a week, and we'll find out what this Federal Reserve meeting is. My guess is not much new that will come out from them that will move the metals one way or the other. That's my guess anyway. So there you have it. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.